Welcome back, everybody, to the Schools in Session 2020 Real Estate and Mortgage Edition. Today, we're going to talk about how you borrow money from your home, from your real estate, and tap that asset. So we're going to get right into it. So there's a big misconception on how much money you could borrow based on what your home value is, what loan to value, which is your loan amount versus your valuation, can get you. And the different types of loans. So let's take a look at the easy breakdown of this. All right, so equity, tap that asset. Let's just say, for example, your home is worth $400,000. So whether it's a one family, a two family, a three family, a four family, a condo, it doesn't matter. Your home value is $400,000. You have two options. You could either do a cash out refinance or an equity line of credit. A cash out refinance is basically when you take the valuation of your property, so say $400,000, and you give yourself a one lump sum payment of X amount of dollars at usually a fixed interest rate. So let's say, for example, right now you have a $250,000 mortgage, your home is worth $400,000. You'd now be able to, let's say, put $50,000 or $60,000 or $70,000 right into your pocket, one lump sum, pay off that $250,000 loan you currently have, and now you have one brand new mortgage for, let's say, $320,000. The other option you have is an equity line of credit, which you can find right here. An equity line of credit is when you keep your current mortgage that you have, if you have a mortgage, and you take out a line of credit against your property, like a credit card, but that debt is then recorded against your property. So let's say, for example, you have a mortgage of $250,000, your home is worth $400,000. The bank may give you a $100,000 line of credit, which then gives you what's called a combined loan to value of $350,000 into $400,000, which is your home value. So we'll break that down below so you guys can understand. So you always want to make sure on a cash out that you're estimating the maximum, which is an 80% loan to value, or known as an LTV. A loan to value is the value of the home, which is $400,000, right? It's the value. And 80% of that would give you $320,000. So what you do is you take $400,000, you multiply that by 80%, and that gives you $320,000. So the maximum amount of cash out you could take right now in the market is an 80% loan to value. So if your house is worth $1 million, you have to go check your legal lending limits. It could be up to $800,000 you can get in a cash out. The higher loan amounts you go, sometimes this number drops down to 75%. Or sometimes even 70%. So it really depends on your credit score and where you're actually going to be having your home mortgage take place. Now, 90% right now is the maximum you can get on an equity line of credit for a CLTV, which is a combined loan to value. So using the example below, let's say you have a $250,000 current first mortgage. Now you could take up to 90% of your home value. So you take $400,000 times 90%. That gives you $360,000. Take $360,000 minus your $250,000 current loan amount. Now the bank will give you a line of credit for $110,000. This right here stands for LOC, LOC, or line of credit. All right. Now, there are certain income requirements. There are certain credit score requirements. The biggest mistake that I see people making right now, in my opinion, is they're not using their equity the right way. They're letting their equity sit in their home when interest rates are at 2.5%, and they're paying monthly debt on credit cards at 18%, student loans at 7, 8, 9, 10%, personal loans at 12% or 13%. They have a car payment, and they're struggling to make ends meet. Meanwhile, they're sitting there with so much equity in their home. if you do a debt consolidation loan or a cash out refinance and pay off all your other debts, you're going to free up so much monthly cash flow that it's going to make your life a lot easier. You're going to be less stressed out. You're going to be checking your bank account probably much less frequently, because you know when your money comes in, you want to make sure all your bills are paid, what bills got paid. Living is hard enough right now in this crazy time we're living in. So I really recommend you exploring the opportunity to either do cash out refinance or a line of credit against your home. My personal opinion right now, if I were you, I would 100% recommend the fixed rate 30-year cash out rather than a line of credit. For many reasons, line of credits come with a adjustable or variable interest rate. So, you never know what your payment's actually going to be every month. It's going to fluctuate, and the bank can actually close or freeze your line of credit at any time that they choose to. So you might think you have a $100,000 line of credit sitting there, and the bank says, you know what? We have too many defaults right now. Close this person's line of credit. Now you go and you want to buy a new car, $20,000. It's closed, and they don't even notify you. So I think it's really important to make sure that you're using your home properly, you're getting the right education, and you're making the right sound financial decisions. I always recommend borrowing more than what you actually need. I had a client one time in the Bronx that, had a house with no mortgage on it. In 2010, he came to me and we gave him a $100,000 loan. I'm like, you should really take 150. No, I only need 100. Next year, it comes back, he needs another loan, another 100,000. So now he's got a $225,000 mortgage. We rolled closing costs in. A year and a half after that, we did a $375,000 mortgage. Year after that, I think we did a loan for $475,000, and then he came back a year later. There wasn't sufficient equity in his house, and unfortunately, he had to sell the property because he couldn't borrow against it anymore, and he had $100 and something thousand dollars, tied up in equity, and he had some debt. He bought some other properties. So, look, anything you do in life needs to have a strategy and a game plan. Yes, that strategy and game plan can evolve and change over time, but not when it comes to debt right now. Debt and mortgage and real estate, money is so cheap. You need to properly leverage your properties that you own to make sure you carry no other debt. Okay? No other debt right now. You should not be carrying debt if you own a property over 3%, 3.5%. If it's an investment property. And again, you don't need an 800 credit score to get an under 3% rate right now. You need above a 640 credit score to get under a 3% rate in most cases right now. So again, make sure you make the right decision. Don't get refinance happy. If you're going to refinance right now. See where rates are in 6 months or a year from now. Don't watch interest rates every day because you're going to drive yourself crazy. You're never going to get the lowest rate in the market. The key is getting as close to the lowest rate in the market. You're never going to catch the absolute bottom. You're never going to buy a stock at its lowest price. And you're never going to sell a stock at its absolute all-time high. Most likely you're not. You might get lucky 1 or 2 times. But if you guys have any questions, you always reach out. Hope you guys are enjoying these videos. Make sure you, going the wrong way, like this. How do I do this? That's my Instagram. Make sure you follow that. Make sure you like this video, subscribe. And then up that way, you'll see a copy of my book. It's on Amazon, Mortgage Playbook for Millennials. It's a little bit outdated, but you get the gist of the story. You'll hear what people have said about me over my career, hopefully all the good things. But it'll give you a really good strategy on what to do. So we're entering a very crucial time in the market. There's a lot of unknown coming election-wise, coronavirus-wise, default-wise, government stimulus-wise. Right now, you make the most sound financial decision for the next 6 months. The goal right now is to get through the next 6 months, and then we reevaluate come early next year. So again, hope you guys are well. Subscribe to the YouTube channel, like the video, follow me on Instagram, buy the book, and we'll catch you later on.